The MACD strategy, this one here, it has one rule that really changes everything. You only trade when price bounces off or near the 50 EMA. That's it. Right? And this filter alone is going to eliminate a lot of losing trades for you. You combine this with a faster MACD setting, and you got a strategy that actually works in today's markets. And here's the complete system. So we're going to use the MACD with faster settings, 3, 10, 16. And we're going to set them all to an SMA. And we are going to combine that with the 50 EMA as our bounce zone. Instead of chasing these big extended moves, we're going to catch the pullback. And then we're going to ride the next move. So why does this work? Well, you know by now that markets, they don't go straight up. They don't go straight down. They move, right? They consolidate and they move again. And for us, we are waiting for a consolidation at around the 50 EMA. And we can also call that a pullback. So what are we going to use for that? Simple. MACD 31016, right? It's going to be faster than the standard one for modern markets. We're going to use the 50 EMA. Now, some people will call this dynamic support and resistance. I'm just going to call it an area where we're going to look for a bounce. And then we're going to have that one simple rule that changes everything. Now, the edge here, you're going to find that this setting of MACD is going to react a lot faster than the standard settings. And that's perfect for a 15-minute or a 4-hour chart where a lot of traders do operate out of. And the rules are quite simple. We want to see trend confirmation, right? Price must be above the 50 EMA. That's an uptrend for a buy setup. The pullback, well, wait for price to come close to the 50 EMA. Close is subjective. We just don't want it too far away from it when we're going to place a trade. And we want to see momentum confirmation. We want to see the MACD line cross above the signal line while price is pretty close to the 50 EMA. Our entry, pretty simple, a market order on a crossover candle close. Our stop loss can go just below the moving average, and our take profits are simple. Look for a recent swing high, or we can exit when the MACD crosses back down, or we can also scale out at the swing high and then trail under the 50. In the sell setup, well, we just do the exact same thing, just opposite. Price below 50, bounces lower, MACD confirms it. Now, there's a critical filter here, right? If the MACD crosses, but price has now moved too far from the average, there's no trade. And how far is too far? Well, you can put in ATR distance to be exact if you like to determine how far too far is, or you can just eyeball it. If it's a strong move with these big thrusting candles, well, you missed that move. Wait for the next trade. Let's take a look at this GM 4-hour chart. We see price pulls back to the 50 EMA, and this is where a lot of traders start to panic and they sell. But watch what the MACD does. It starts to curl up, starts to hook up, crosses bullish as price is starting to make that next move to the upside. So we enter here. Stop goes just below the EMA at $67.63. You can target the next potential resistance zone, use it to scale out and then trail like we talked about until you see a clean cross of the MACD or the trail outside of the 50. And here's an advanced tip. For a little bit higher probability trades, pay attention to where the MACD crosses. So when we're looking for a buy, the best setup is that MACD crosses bullish while still below the zero line as price is bouncing off the 50. So this means that the pullback is ending, the trend is resuming early. You want to avoid bullish crosses too far above zero, right? That's when momentum starts to exhaust and you're going to expect a consolidation or a pullback. For sells, the best setup, again, MACD crosses bearish well above the zero line and price is rejecting 50. This means the bounce is ending, the downtrend is resuming. And you certainly want to avoid those bearish crosses that are too far below zero. So the logic here, you want to catch the turn. You don't want to chase the trend. So when the MACD is on the wrong side of zero, but crossing towards the trend direction, well, you're getting in early. So why does this beat everything else? Well, we have earlier entries with a faster MACD. We have a defined risk at or around the 50 EMA. We have clear zones, right? We don't guess where to enter. We know. And it works in trends where the real money is made. And the final rule, if you do see price closing decisively through the 50 EMA, that bounce has failed, right? Just wait for price to reclaim the EMA before looking for any new trades. So you really want to stop using the outdated MACD settings, right? Stop chasing those extended moves. When you use the 31016, faster signals, wait for the bounce, and only trade when the MACD confirms at around the bounce zone, and that's it. This is not financial advice, all right? Make sure you test it yourself and find ways to make it suit you, right? Everyone's got their own little flair when it comes to trading. Thanks for watching.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPick's full risk disclaimer and privacy policy.